What is up guys, my name is Ignas, welcome back to the channel. Today we are taking a look into ASML Holdings, ticker symbol ASML. They are in fact the largest semiconductor equipment manufacturer in the world, currently with a market cap of $266 billion US. But the stock unfortunately wasn't kind to investors recently. On the year to date it is now down for 18.77%, dropping from almost $800 to $650 per share, but even that could be worse still. Back in September of 2021, ASML had the highest of $896 per share, so anyone who bought at those levels would be now down for almost 30%. On the other hand, there was some decent growth. In 1 year the stock is now up for 9%, and in the last 5 years it added almost 430%. At first glance, price to earnings looks to be quite high at 39.78, and they are paying a dividend which now comes at under 1%. So for our today's analysis, first we will take a look into the most recent earnings results, then financials and fundamental ratios of the last 5 years, after that what analysts think the stock should be trading at, then if any Superinvestors are holding it in their portfolios, and lastly we'll take a look into the technicals of the price chart. I think that this could be an interesting one to look into, so let's start. So last time the company reported was January 19th, and the chip gear maker tops views on earnings and misses on sales. So on bottom line they reported $5.02 in earnings per share on sales of $5.7 billion for the fourth quarter. So earnings beat analysts' estimates where they expected $4.25 per share, but sales came in a bit short with analysts' expectations at $5.85 billion. There was also year-over-year growth. As for the same quarter last year, they earned $3.91 per share on sales of $5.15 billion. Now the forecast for this upcoming quarter is less than optimistic, as ASML predicts to have sales of $3.86 billion, where analysts expect it to be way higher at $6.07 billion. But they do bring some clarity on the lowered sales guidance, where analysts suggest that it is mostly related to delayed revenue recognition for certain systems delivered under the company's fast shipment program, and those sales will be recognized in the second and third quarters. So even though the quarter we are currently in will fall short, upcoming quarters after that should even this out. Now let us go take a look how the company has been performing for a longer period. So back in 2016 they were bringing in $7 billion for the trailing 12 months, then in 2017 it was up to $9.31 billion, then in 2018 we had it up to $12.28 billion. It was going a bit sideways in 2019, as on the trailing 12 months it was just over $12 billion, but then it started picking up steam again. As for 2020 it was up to $15.48 billion, and then with the most recent quarter here, revenue is now at $21.27 billion. So there was a small slump in 2019, where we had a year-over-year quarterly decrease, with revenues for those quarters going down for 9.86% and 11.69%. But without counting these two, there was only quarterly growth year-over-year, with the largest increase in the first quarter of 2021, where revenue was up for 95.43%. Now the next part I want to take a look into is the price to earnings ratio, and this is the history for the last 5 years. So back in 2016 price to earnings was at 28.08, then in 2017 as the price increased, price to earnings also increased to 30.14, then in 2018 price decreased, so price to earnings went down to 21.04, then in 2019 earnings went sideways, but the price increased, so price to earnings surged to 42.36. In 2020 we had a substantial increase in price, so price to earnings stopped at just over 50, and recently with the price going lower, the PE ratio went down a bit to just around 40. So it seems that the best time to get in was back in 2018, where we did have a combination of price decreasing and earnings increasing, with price to earnings bottoming at just over 20, but with the price surging in 2020 and reaching the top in 2021, we are still now way higher than we have seen in the last 5 years. But there is a better chart where we want to see as much red as possible, and that is the number of shares outstanding. So back in 2016 number of shares was at 0.43 billion, then in 2017 there was an increase of 2 million shares, up 1.41% year over year, but after that we did see a continuous downtrend. In 2018 it was back lower to 0.43 billion shares, then in 2019 it was lower to 0.42 billion, in 2020 lower again for 3 million shares, down 0.71%, and with the most recent quarter here, number of shares outstanding is now at 0.41 billion, which is down 2.39% year over year. So it seems that in the last 5 years they have been consistently buying back shares, giving value back to shareholders. But there is another option to give back to shareholders, and that is dividends. So this is the dividend yield history for the last 5 years. Back in 2017 they paid $1.26 per share, which comes in at a yield of 0.99%. Then in 2018 the payout increased a bit, but the price also did increase, so the yield went lower to 0.88%. After that in 2019 the price went sideways, but the payout kept increasing, so we had a yield of 1.13%. Then in 2020, as the price kept on increasing, the yield went down to 0.90%, and then with the price surging in 2021, we had the dividend yield bottoming at 0.5%. So back in 2019, where the payout was at $3.45, the dividend yield topped at 1.28%, but the most recent payout is just a bit higher at $3.96, though the price did increase for almost 3 times, with the yield bottoming at 0.49%. Now I did add ASML into my dividend investing watchlist, and these are here the results. So what I'm getting is that the average dividend yield in the last 5 years was at around 0.87%, meaning that buying the stock in 2019, where the yield was at 0.13%, would have resulted in a yield on cost 30% higher than the 5-year average. And with the price surging in 2021, we would have locked in a yield that was 44% down from that same 5-year average. And recently, with the price going lower and the yield of around 1%, we are now already over the 5-year average for 14.5%. So we checked historical numbers, but now let's take guidance. Here we have analyst price target expectations for next year for ASML. Out of 7 predictions, they range from the lows of $720 to the highs of $1,030 per share. The average out of these 7 targets is at $866.81, and the price is currently trading at $647.83. This suggests that on average, analysts predict that in 1 year the share price should go up by 33.8%. Now let us take another angle. So these are analysts' estimates for next year's earnings per share, and out of 3 analysts, on average it comes at $23.27. If we assume that the price to earnings remains the same, then with the increase in earnings, analysts suggest that the share price next year should be up for 18.2%. So all in all, it is safe to say that analysts are quite bullish for ASML, at least for the next year. Now in this next step, we'll check what Superinvestors are doing with the stock. It seems that currently only 2 portfolios are holding the stock, but they both have been adding more. So Maverick Capital recently added almost 3% into their position, and are now holding over 22,000 shares, valued at almost $18 million US. And then Poland Capital Management also added 2.6%, currently holding almost 81,000 shares, with a position valued at over $64 million. So it seems that at least these super investors are net buyers, with the only problem that I see here is that the percentage of exposure in ASML is quite low. Maverick Capital has it at 0.21%, and for Poland Capital Management it is even lower at 0.11%. So even though these super investors are buying, the positions for them are actually really small. I would love to see more buying activity given that analysts are so bullish. Now let's take a look into the technicals. So the last time ASML was way over the 50-day moving average was back in November of 2021, with the price at around $88 per share. But after that it kept going lower. In December it was going sideways under the 100-day moving average, with it proving to be quite a decent resistance. Then by January of 2022 the price went lower to the 200-day moving average, closer to $740 per share, tried to go back up in the middle of the same month, but then failed and kept on going lower. By the end of the month it went under the 300-day moving average to around $650 per share, and then it seems that we had 2 times where it tested the 300-day moving average resistance. One was in the first days of February, with the price going almost to $700, and the 12-day moving average of the MACD crossing the 26th one to the upper side, and then on the 9th of February, with a lower high of $682, but the gap between the MACD lines was still increasing. Now as of the 18th, the price is now just under $650, relative strength index under 50 at 42, and the gap between the MACD lines is decreasing a bit. A concerning part is that we will soon get a bearish moving average crossover with the 100-day moving average going under the 200-day one, and that could pressure the stock to still go lower. On the other hand, if we zoom out, there haven't been many opportunities where the price was under the 300 or 200-day moving averages. So this could be an interesting place to consider, at least for the long term. Now let's do a quick recap of what we found. So on their most recent earnings, ASML beat EPS expectations, and even though the next quarter should be worse, we should be seeing acceleration in second and third ones. Now revenue in the last 5 years have been increasing consistently, and only in 2 quarters there were decreases year over year. With the price going lower recently, the PE ratio improved a bit, but it is still quite expensive compared to the levels we had prior to 2019. It seems that the company is continuously buying back shares, as the number of shares outstanding is steadily decreasing. And they are also paying a dividend, which is currently more than 10% higher than their 5-year average. Now for the next year, analysts expect quite a performance, with the price on average going higher from 18 to 34%. And Superinvestors seem to be net buyers, with the only problem I see is that only 2 portfolios are holding a small position. Now with the price dropping recently, we still have moving averages to cross lower, and that could bring the stock to sell even more. But with the price now going sideways under the 300-day moving average, zooming out, there haven't been many opportunities to buy it at similar levels. And that was it with ASML. Don't forget to support the channel and leave a thumbs up under the video. So what do you think? Is the stock a worthy pick right now? Share your stance in a comment below. If you would be interested in getting notified exactly when I buy or sell any stock, then consider memberships. By becoming a member, you will get access to Discord, where I share my stock watchlist and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. Last week I did an analysis on another semiconductor name, so if you would be interested in that, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.